Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I have Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company. Evan Cohen, co-founder and chief operating officer with Vincent.com. It's a media company focused on alternative investments. Clint Sorensen's out today. So we'll get going. All right, fellas, some big rounds this past week, right? So let's start with Groq. So Groq pulled in $640 million Series D, right? Which put their valuation at $2.8 billion. So Groq is like a semiconductor company. They make AI chips specifically focused on inference, right? So that's like, Nvidia makes the GPUs, which can be used for training an AI model and for running an AI model, which is called inference for chips. Groq just focuses on that inference piece, right? And it's better performance, so faster responses on the chip and also less electricity. That's kind of their value prop, if you will, right? But Cisco, Samsung, BlackRock came in. And of course, these guys are looking good. So maybe, Nick, we'll start with you. Like, I'm interested. Groq is a $2.8 billion valuation company. That's like, based on most of the companies we speak to, that's kind of low, right? That's lower. They're also, I think, just starting to make revenue this summer. But like, what's the buzz? What are you hearing about Groq out in the marketplace, like with brokers and other interesting industry participants, if anything?
Sure. I mean, the closest stock to it that we have probably elsewhere within 8View is going to be Cerebras Systems. So also a competitor to Nvidia or Intel, AMD, and it's starting to really approach very, very quickly the valuation there. So I think Cerebras was up at around 5.5 billion, and
Okay.
you clock Groq at Series D for 2.8, but that's up
Right.
140-ish% from the prior round. And these are all going quickly. So the pace on these is really, really going as people seek alternatives to Nvidia and other chip makers out there. And also, it's just really interesting the emphasis on speed here, because I think Groq and Cerebras are both really promoting speed above and beyond what else is out there in the market. So everyone's starting to really compete and look for alternatives because, I mean, without a proper supply, you got to diversify as well. So I think Groq and Cerebras are both really, really interesting to look at right now.
Yeah. So Evan, $2.8 billion. Nvidia, don't hold me to this, but I think it was 3 trillion market cap, right? The last time I looked. That's huge, right? 2.8 billion for arguably something that could compete. Even if it's like marginally successful, right? Investor can see a nice return. Would you kind of agree with that? Like, what's your take on kind of this chip space, and like what the prospects are for some of these, companies that are coming up through the private markets?
Yeah, from my understanding, last year's 2023 revenue, they were clocking in a little less than 4 million. So it's like $3.8 million of revenue. And valuation is what, 823x for
Yeah.
last year's revenue. So
Right.
it's a pretty hefty valuation relative to what we've seen in the past. Obviously, 2024 seems to be the year they're really kicking off. And so maybe perhaps the revenues in Q1 and Q2 marginally justify the valuation prop. But I do think at the end of the day, the concept of AI being everywhere, especially on device, edge computing, that seems like a very likely outcome of where AI goes. And, if NVIDIA is really handling the massive data center piece, it does make sense that for another company to really tackle the service area elsewhere. And look, they've got enough money. They've got some really talented engineers. Their founder CEO is like one of probably the best in the business, and they've been working on this business for over a decade. So
Yeah.
I do feel that from an IP, from a technology perspective, it seems quite interesting. It's probably a pretty hefty valuation, but it's also really probably a likely acquisition target. 2.8 billion is not really, it's expensive, but
Yeah.
if you're an Intel where your stock is getting crushed and you need to figure out something to do, it feels like a pretty nice opportunity. Qualcomm, again, or ARM. There's a lot of
Right.
opportunity for other companies to acquire them. So it seems quasi reasonable in my opinion.
Yeah. I just looking at this on its face, these semiconductor companies obviously have performed really well. The publicly traded ones they're just crushed, right, in the last year and a half. If you believe in this thesis that AI is going to continue to grow, right, and become more relevant, these are going to be like bottleneck type things, right? With these chips, this is like my take on Groq is this is like the ocean. The ocean will take you into shore no matter what, right? So like even if you're swimming against the ocean and you get in at the wrong time with Groq, you're still going to make a nice return. You can't you almost can't mess this stuff up, I think. To Evan's point, it's got a good management team, and I think that's why it makes sense to probably pull the trigger on these guys. Like that's a really smart group of people, and they got great investor group too. Like I can't see these guys messing up so poorly where it's not going to be like a 4 or 5x return. I mean, that would be a 5x return would
Aaron's
put them at
all
like like a $20 billion company. I mean, come on, Nvidia is $3 trillion. Like this seems like such an obvious thing if they can deliver. And with this management team, I think they have a decent shot of delivering, of kind of building a proper business, right? Which then I think puts them in that $20 billion range.
I mean, let's break down just for a second though. Like semiconductor businesses are they're pretty standardized in terms of their flow and where they make their money, right? You have to have a really good distribution where like there are customers willing to buy. You have to have great IP that's defensible that you can't get copied, and you have to have really good manufacturing margins. And I think that's probably the biggest risk for Groq because at the end of the day, most of these semiconductor products are being built overseas. We have geopolitical tensions. We've seen that in the past with other firms, and so yeah, there is certainly some risk here. But I do feel like at 2.8 billion, whether or not the company figures out its sales mechanism, it's probably a nice acquisition target on IP.
Yeah, what I do like about Groq is they bought a cloud business or merged. I think they bought the business if I remember correctly, and so now they're offering cloud services to their own chips, that these LPUs, language processing units that they have. So like. That's easy now. That's like very low barrier to entry to get in to use Groq, right? You just hit their API and you're in business, right? You're using them and they're making revenue. So that's a nice differentiator.
CoreWeave is what, 20 billion?
20 billion.
Yeah, so like it's they're just taking over surface area there. I think that's a nice opportunity.
Yeah.
The vertical integration makes a lot of sense. And Aaron, to your point on the management team, you saw that today, whether we hear this tomorrow. But with the move from the Chipotle CEO over to Starbucks, right? That had a 30% delta between the two stocks. Chipotle is down 10%. Starbucks is up 20%.
That's right.
I think that's a huge deal in a lot of these what we would call a young company in the semiconductor space, to have that, whether they're going to be navigating those ships being lifted by rising tides, right? Just to be acquired by the bigger players or to really make something defensible. But in this market, I kind of do think there's some validity. In most markets, it's not. Despite the amount of competition, there is so much demand, pent-up demand, that everyone is kind of winning, which is very, very interesting, whether you're looking at any other comparable name in the public or the private market here.
Right.
So,
yeah.
I'm not gonna put my finger on the 4 or 5x, but I will say at least for the next year or two, I mean, the wins in the sales of these companies.
That's right.
Despite that, there's a lot of seller pressure in the private market though, so they're actually oversold relative to a lot of the other names. So like 90% of the activity that we're seeing on Groq is sell.
I believe
sell
that.
orders. Yeah,
like I believe that because it's pre-revenue. I mean, it's 2.8 billion is no joke when you're a pre-revenue company, right? So it's a lot. It's a lot. Like, so you're definitely stepping into some risk there. But I got to tell you, in the broad spectrum of things, I think is a very interesting risk to take. From I'll call it a risk-adjusted returns perspective, right? That's an interesting risk-adjusted return profile. So. Okay, let's talk Anduril, right? So Anduril's a defense tech company. They just did $1.5 billion raise. They're at $14 billion valuation now, right? So they were at $10 billion valuation in December. So it's $4 billion pop in call it 8 months time. Their revenues at $500 million. So it's like a 28x revenue multiple. These guys are running circles around Boeing, Lockheed Martin, you name it, right? They are like innovating their manufacturing stuff. And now they're talking about this Arsenal manufacturing platform, like basically manufacturing facility that's going to just create a ton of hardware for the military. So these guys are a darling. I got to tell you, my advisor clients like love this company, right? But I mean, so Evan, what do you think? Like $1.5 billion round's a big round, right? Sounds like they're going to use the proceeds as this manufacturing plant. Like, what are you hearing about Anduril? What are kind of your thoughts about the company?
I mean, to be fair, I've been trying to invest in Anduril since 2020. This is a company where when I was trying to get in when their valuation was a little under 5, and the shares were going for 9, and I thought that was expensive, and then they were at the 10, and I looked silly, and now at the 14, and I look even sillier. I think that look, first of all, this is an amazing founder
Yeah.
who has got excellent investors.
Yeah. Lucky Palmer. Yeah.
He's in a market that where the spend is, we're talking almost in the trillions. So like there's a massive TAM. And I think that there's a huge opportunity here for people to be more cost efficient, and the incumbents that are there, their valuations are in the tens, if not hundreds of billions. So look, I think that there's a massive opportunity for Anduril to continue to take space. I think the biggest challenge, I also think there's going to be continued geopolitical conflict for a long time to come. So there's always going to be a customer for them to sell to. I think the biggest challenge is like, how does the company expand beyond the allies, the United States? And that's really where there is some sort of pressure there, but those natural monopolies and these businesses that can sell great products, they're going to make a lot of money. And I think even at I actually thought that the latest round was not a massively big up round. It was a $4 billion increase in valuation. $1.5 billion of that was cash into the business. Like that's not an insanely high multiple compared to some of these other tech forward businesses. So I thought it was a pretty good deal. And I'm not saying I'm a buyer right now because I'm looking for a good deal on it, but I think it's an excellent company.
Yeah. So Nick, what are you seeing in the secondary market? Kind of data coming through AFU on Anduril. You get a lot of calls on these guys. Like, what do you think?
Yes, absolutely. So Anduril is one that kind of breaks models, right? It's trading at a premium to its last funding round, where these 14 billion valuations are coming from. It's evenly split between 50-50 buyers and sellers at huge volumes, and the volumes continue to go up. So as Evan was saying, he was looking at this for years now. That volume just keeps going up. And this is back to our point that we always raise. There's a public and a private stock market. This is one of those marquee names that's probably not going to go away anytime soon, particularly with you guys mentioned the use of proceeds. Like they're making very clear use of the capital that's coming in to grow that business because there's again unsatiated demand, and they are able to capitalize on all the technological advancements that we've had over the last 5-10 years, way better than the incumbents. So if ever there were kind of signs or factors that point to this being a traditionally run company just going extremely well through the funding rounds and eventually landing in the IPO territory, I'd put it pretty high on this one because they just have all the logical moves. They're stepping up. You know, they do show that they can keep just using capital that's coming in the door and continue to make money on it. It's pretty brilliant, which is interesting because you can kind of say the same thing for SpaceX, but I wouldn't put SpaceX in that camp. I don't think they want to go public. I don't think they want to be under the same level of scrutiny. But for Anduril, it would just open up a wider market. So
I mean, Lucky Palmer is a stud, right? I mean, for those that don't know, he founded Oculus and sold it to Meta. So this fellow's already like very wealthy person. So this is his kind of second business that he's founded, and you know, they're just doing things differently. Like my understanding, and I'm by no stretch of the imagination an expert on government contractors and how that process works, but my understanding with this type of government contracting is usually the government puts out a bid and then it's like a cost plus type model, which is a whole bunch of moral hazard around, delivering on time and the cost in which you deliver a product or a service to the government. And Anduril coming back. Like my understanding is they make a product with their own capital and then they go and sell it to people, to governments, which is like how the rest of the world works, right? You make something and then you tell people to, iterate on it or make it better. And then you go and sell it to people. That's what they're doing. And they're killing it. Like, and Boeing I mean, everyone sees what's going on with Boeing, right? Those poor guys can't get out of their own way recently. So I almost feel with the wins, like almost every week or every other week, you're hearing a win from Anduril. They're winning another, bid with the Air Force, another win with the military, another win. Like they just did a whole bunch of autonomous subs with the Navy in Australia, right? Like, I mean, they're just every other week they're getting a new contract that's getting announced.
I think when you're iterating so fast, and I'm sure we've all had this in our careers where RFPs are put out by, let's say, the government or a very large client, and then you tender for them. Okay.
Yeah.
Oftentimes, RFPs are born from, even if it's us, a data vendor going and showing something really cool to the government and then saying, oh, wow, okay, let me write an RFP that kind of fits the mold so we can buy this stuff and go through due process. That's the feeling of Anduril technology.
That's right.
Here,
that's right.
So
yeah, and just to, like, one last point here is that the investors of this round, and probably their largest backer to date, is Founders Fund, started by who else? Peter Thiel.
Yeah.
What else did Peter Thiel found? Palantir. Who does Palantir sell to? The government.
Yeah.
Like, if there's anybody who understands the process of getting government contracts and generating that revenue and building those relationships, it's Peter.
Yeah.
And so, I feel like they've just got an amazing network of people who can make this business very successful, and they're just executing full throttle. It's really impressive.
It's just, we're almost going to hit a point, and this is where I think it's an interesting investment thesis for Anduril, because I think you're going to hit a point where they're innovating so quickly and they're delivering, right, good value, where it's almost, I think it's going to almost become like, well, they'll be like the default option. Like, I'm sure as they started, it was like, well, I don't know, should we really, work with this like startup company? That's smart. The technology is really interesting. Let's give them a shot. But now it's before long, they'll be like, these guys are great. They're a big company. They deliver on time. They have great product. And I have these 4 other things that it would be interesting to have them do, and it becomes like this like incestuous partnership between them and the military. Like, that's huge revenue unlock, which Aaron, I think would translate to valuation, right?
Can I ask you a question, Aaron? Just because you're dealing with a lot of institutional investors and people who want to invest in this stuff. Do you feel like the investor pool is relatively limited for a company like this because of the fact that it's defense tech, because it's in a quasi vice category? Like, does that make it more available or less available?
It's interesting. Like, my people in Texas love this company, right? So you're not wrong about that. Like, I definitely think there's, it's not for everyone, right? For all the reasons you just said. But for those that embrace this type of, I'll call it investment opportunity, they're like very interested and very bullish on it. So it's not for everybody. You're right, Evan. But those that like it, they like really want to get in and support the business, so
I just feel like, a lot of this stuff is picked over, and I feel like this is like it's a sector that has quasi not been picked over yet because
for sure
most investors have not been able to touch it based on their existing LPAs and agreements. So it does create an opportunity, I feel like, that's separate from the investment, like the actual like financials, where like, hey, like maybe I can get this before somebody else does.
No, I mean, it's interesting because it's also like, it's a hardware company too. I mean, they do AI and so on. They have software too. I mean, I understood, right? But similar to like SpaceX, they're making physical products, right, that they're selling to people. So that's like, if you look at the other companies that we track, not everybody does that, right? A lot of these companies are kind of, software or service companies, right, as opposed to making actual physical objects. So it's an interesting business. I'm bullish. So congrats to these guys on the round.
And I think that the barrier to entry in this sort of business is so high, and the fact that they've had this so much success, they just carry through that momentum and keep going.
Oh, for sure. Like, listen, if Palmer Luckey hadn't sold that first business, he probably wouldn't have done it. You have to have capital, because I'm sure he owns a healthy portion of the business too. So he probably put a lot of his own money in to get this thing going. You know what I mean? So that it would kind of make sense. But let's hit on this last topic real quick, fellas. So we've obviously talked a lot about AI, right? And there's a ton of buzz out there now, especially in venture capital land, about like, and frankly in the public markets too, like, are we going to see the revenue associated with all this capital investment, right, into the AI space? And I think in the public markets, a lot of people are talking about Nvidia, so it's the chips, right? So you got all these, Meta, Amazon, Microsoft, like buying chips from Nvidia, and that's showing up in Nvidia's earnings and revenue. And then they're spending this money, and people are like, are they going to keep spending the money? And now a lot of people that I'm talking to are saying they're going to have to show the revenue. So if you show the revenue, then the spending will continue, and then Nvidia will keep going. But I'm starting to see more and more companies, big companies, right, launch AI projects, which means to me that's revenue, right? They're not obviously talking about the platforms or the chip companies, how much revenue that is, but or the Metas or the Amazons of the world. But just recently, JP Morgan, Morgan Stanley, Goldman Sachs, financial services companies all announced like live AI projects that their employees are using now. And not just like a handful, like JP Morgan said 60,000 employees are using this AI solution that they just launched, right?
Wow.
Morgan Stanley, I think they have 15,000 financial advisors are all using this financial advisor AI solution that they just launched, right? So these are like huge projects that I'm sure are taking hold within the company. And then of course, Klarna, which we talked about a couple of weeks ago, they're implementing AI to the tune of 70 employees a month reduction in headcount, right? So they're basically replacing humans with AI. Which I would expect as a technology company, right? So they're really embracing this, but you're starting to see the adoption. So my question for you guys, maybe Nick, we'll start with you, is like, do you agree that we're seeing adoption, or are you seeing kind of different types of adoption out in the marketplace? Is maybe the first question. And the second question is, do you think this adoption is going to increase? Like more people will use AI more, or consider it the same or less? I think it's an obvious answer, but like, I'm interested to hear your opinion.
This is the softball pitch.
Yeah.
I appreciate that. Is AI going to increase? Yeah. I mean, we're already seeing the cost savings. We want to see the revenue growth, as you're saying. The fact that it's going towards these institutions just makes a ton of sense for them to publicly announce that, because everything's operating off the assumption that the cost of compute will go down, which it is, more competition coming to the market.
Yeah.
And then everything's being run off data. And I always forget the stat because it probably changes every hour, but 1/2 of the world's data was created in the last like hour or year or decade, whatever it was, right?
Yep.
But and you think about private data, that's when it becomes really important. And I'm not touting private markets data. I'm actually touting, you just said there were 60,000 people at JP Morgan using this. That's intranet data. When you talk to someone from JP Morgan or Goldman Sachs and you say, hey, you want to rent a vacation home this weekend on Montauk, they don't necessarily queue up Airbnb. There's the intranet. And somebody has a house or 15 houses out in Montauk that they can look at. So the intranet of data that sits within every one of these banks is so profoundly massive that if that can be tapped into through any sort of their own processes, there's such a huge amount of value. And that's why I think when you said it was JP, it was Goldman, and it was Morgan Stanley, the private data sets that they sit on are so much more massive than almost anybody else. It makes the most amount of sense for them to carry on down that path before most of us. So yeah, that's going to be a huge value creation, probably with fewer people, unless people can really sustain and show, no, I'm adding value, I'm adding value. So I think the output per person is going to go way up at the larger institutions, whereas an institution we've all worked for large shops and small shops, the benefit from an intranet at a 100-person company is going to be not
massive.
That great, but the output will be bigger, right?
Massive.
So I'm just thinking more of the data play for the banks and things like that for now.
Yeah, got it. What do you think about this kind of AI adoption? Are you seeing businesses out there, buddies that you have in the marketplace, different friends at different companies, like it's starting to adopt AI in their companies?
I mean, I feel like at least at the startup side, we're seeing almost every startup adopt AI and at least playing around with it. Now, I'm not sure that to actually what Nick said, I agree. It's like the smaller the company is, maybe the value proposition of AI is actually not as impactful because you don't have as much data to work with. And oftentimes you're trying to use the tools, but you don't have the team to implement a product that might give you the optimal use for AI, say, unlike a big bank where they probably had a team of tens of engineers figuring out the best way to configure the data to get you the output that you want.
Yeah.
I do think still, at least from what we're seeing, there's still an element in which people don't trust the output of the data. There's still hallucination. Sometimes the data is incorrect. Sometimes you have employees that trust the data or the output too much, and it's incorrect, and it can have really problematic cascading issues, especially when you're dealing in something like financial services or insurance or medical. I do believe the long tail is pretty obvious. We've talked about this many times, like productivity on the individual level should excel dramatically.
Right.
I believe that will lead to massive revenue and profit gains for large organizations and probably even small organizations. I think today, though, when you look at the prices and the expectations around these businesses, I do feel like it's a little bubble-ish right now. We haven't seen those productivity gains yet. It feels like it's a lot of euphoria. I think that, yes, it's probably the right time to put chips on the table, and there will probably be a couple of winners and a bunch of losers. And if you have chips on the table across the board, spread bets, you'll probably capture some of that gain in the long run. But me as an operator, I haven't, we use it a lot, but I haven't seen it to the point where it's been able to replace a person. And I haven't seen it where it's allowed, I would say that it's allowed some of our team to be more productive, but I don't know if the output's increasing that much. In fact, I think that, something that took 2 hours now takes 45 minutes. And I don't know if my team is going and spending the next hour and 15 doing something else. They're kind of just like, well, now I can leave early. It's summer. Like, let's, et cetera. So,
you know how Aaron and I feel about that. We don't like that one as much.
No, I know. But I'm just saying, because this is like there was a study that came out a couple of weeks ago about universal basic income. I'm not sure if you guys saw the tweets, but it sort of alluded to this concept that, like, when people have more time in their schedules and the work isn't as hard and the outputs are the same, they're not necessarily doing more work. They are incentivized to relax, to spend more time doing personal things. And so I do believe that finding that balance is still not there yet. Like, we haven't implemented it at okay, like, now you're expected to do 40% more work because you have AI tools. I don't know if, like, we have those expectations have not been set yet properly. And so
is it fair to say that so I hear that and I like salivate, Evan, right? Because I love when people take an opportunity and go the other way with it. Because I'm like, oh, I'm gonna do 100 times more work. You know what I mean? Like, I'm gonna rip somebody's face off. So, like, this is that to me is like, that's like what makes a market. Like, I'm a capitalist. I can't help it. You know what I mean? So I hear this like, oh, there's an opportunity. Like, somebody's gonna step up and do it. Do you think there's a lag though? Like, it's got to be fair. Like, it's a natural human thing, I think, to do what you just said, right, Evan? So, like, this new productivity solution comes out, people use it, they can do the same amount of work with less time, and then management kind of like has to like let some cycles happen right before they're like, okay, everyone's like peeling out at noon on Friday. Maybe we should be asking people to do more. You know what I mean? And there's like a natural progression. So do you think maybe we're like, a couple quarters away from people realizing those gains and starting to ask folks to do more? Is that fair, you think?
I think that it's going to be a cycle. As I said, I feel like the market's a little euphoric. I think that people have big. I think that when this bubble ultimately does deflate, I don't think it'll pop out. Like, when it deflates, you'll start seeing companies realize that, hey, like, this is not euphoric. We have to forecast and properly incentivize the people and become efficient, and we will reach that profitability over time. A couple of quarters, maybe even a couple of years, it depends. But I think over time it will even itself out. But right now it feels like everyone thinks that, hey, we're going to give everybody in our team AI and they're going to be 50% more productive, and that's really idealistic, but it's not necessarily human nature.
Well, so Nick, what Klarna's done, I think, is super thoughtful, right? Because my understanding, so I listened to their CEO, did this interview. It was a great interview. And he literally went like case by case talking about how they're implementing AI. And, to like Evan's point earlier, they had like, I think, a team of 20 literally like parachute into a team and they're like writing business requirements and understanding how to do it. And then they're building specific AI solutions to like address a specific need, right? Which is very different than being like, hey, here's a ChatGPT subscription, like go nuts, fellas, right? So do you think, I mean, as more, I would anticipate that looks like the right way to do it because Klarna's having a lot of success. Maybe do you agree with that statement, right? And then,
Yeah, totally.
Okay, so then it's really just a function of time, right? Before more companies start to do that.
We talked about it with Klarna 2 weeks ago, and Klarna's kind of the perfect fit, right? Because they had really fast growth and then a big knock on the head during the pullback of 2022, and they've really re-engineered things already built on a recent foundation. So the foundation was max decade old properly.
Right.
So they can have that natural attrition, wean people off, which is I think what they did, and they had the SAS team or whatever you want to call it, the paratroopers come in and do that work. I think that's a great use case. What Evan describes, whether he realizes it or not, I really think you guys probably aren't hiring as many new people because you don't need those new people to do the new things.
That's well said.
So it's the same idea, you know? And I think when Nick, you really,
that's actually a super important statement because I think like depending on like if you're a very big business, you're probably going to be reducing headcount because of AI, right? And if you're a brand new business or a growing business, right, you're probably going to not be hiring as many people, right? So, I mean, I would argue I'm not a seed stage venture capital guy, but if I was a seed stage venture capital guy and people were coming to me with like headcounts, like P&Ls with headcounts that had a huge number of people, I'd be like, ugh, like, really? Like, do you really need that many people? Like, shouldn't we be using AI in your models? And like, you know, and how much savings will that generate for you, right? Versus kind of a more human driven model, right?
Yeah, and the old productivity measures probably don't matter as much as they used to. So I rolled through, sad to say, like dozens of resumes this morning, right? Everybody had a 4.95, 4.96, or sorry, out of a 4.0, they had 3.95, 3.96, and 3.97 GPAs. Like, how does everybody have pretty much a 4.0 GPA these days? And if that's a measure of productivity or a comparable, like I want to know your class rank. I don't want to know that you scored really well. I want to know that you're better than everybody else, and that's the competition. That's the idea that I would go for, because then I talked to a fund this morning that had in excess of 12 billion AUM with fewer than a dozen employees. Like that's efficiency. You know, that's what we're going for.
Right.
You know, that is going to be the ultimate standard. So, yeah, I think less and less are investors probably focused on headcount as much, but maybe how much we can get out of the headcount is pretty massive.
Yeah, fair. I mean, I've had conversations just in the last 2 or 3 weeks. Like I've sent this Klarna interview to like, I can't even tell you how many people.
Yeah, and I posted a different Klarna interview on the post from 2 weeks ago. So if anyone's on LinkedIn or Twitter, you can see that up there.
I mean,
he's phenomenal. Yeah, their CEO is
what
great.
What they've done is like, it's like poster child. Like if I'm a managing director or a senior person at any company, I'm like running around with that, showing it to people, being like, we can reduce 25% of our headcount if we do this properly. Like that's a huge, earnings unlock.
So actually super curious. Let's say that your comparable was Discover Card, MasterCard, Capital One, things of that nature. Would you invest in one of those three, let's say? And would part of your assumption be, okay, how well can they execute a strategy similar to Klarna's, like in the public sector?
Well, let me say it this way. If I was a stock analyst covering the payments industry, right, which is the companies that you just named, after seeing what Klarna just did, right, I would be having conversations with their C-suite about how they're implementing AI.
Right.
And if they are, and how do you think that's going to impact earnings? And what's the total reduction in headcount? And how accurate can you be on those estimates? And all of these things, right? So like at some point, and this is like kind of what maybe like we were talking about, like Evan, you were talking about like there's this like lagging effect. But at some point, I think everyone's going to wake up to the fact that like everybody should be doing this. And if you're not doing it, you're doing it wrong. And I just don't know when that's going to happen. But I think my opinion is that's going to happen, I think, sooner than later. Like we're 12 to 24 months away from people waking up being like, why are you not using AI?
Well,
right?
Put the
I think
.com after your name, right? Like, who didn't do that 25 years ago?
That's right.
I think it just depends though on if the employees of the business are decision makers or they are, independent, contributors. So for example, like for Klarna, I think that, using AI to optimize roles for support makes a lot of sense because those are something that an individual contributor can sort of make a decision and help a customer, and it doesn't have like a downstream impact on the business. But like, let's say you're an insurance broker or like one of those big insurance companies, and you can have AI analysts, drafting policies and underwriting. But at the end of the day, the decision maker, the person who's like executing and approving the policy, still needs to review that. And as I said before,
Agreed.
It's like we haven't gotten to the point where AI is trustworthy enough to like sort of automate those bigger decisions, and therefore,
Agreed.
if you have one person approving or underwriting the approval process, if you have 5 analysts under them that were doing, let's say, 5 underwriting sessions a day, and now they can do 15, that doesn't make it easier for the person at the top to speed approve 15 more, right? Like they can only do so many things. You have a bottleneck in certain industries. Investment advisory is sort of the same way. I think that like at the end of the day, decision makers, they can only make decisions so quickly. And if that's human created, you're going to have a bottleneck. So certain businesses, I think AI makes a lot more sense to automate and cut overhead and make things more efficient. But in some businesses, it doesn't really make as much sense. The $12 billion firm with 12 employees, that's an amazing business for what it's worth. But like that's also like maybe the business, they're not making that many decisions.
Yeah, it's already optimized.
Have you ever played pool? Have you ever gone bowling with bumpers? Right?
Yes,
yeah, I love it. My kids love that.
Yeah, you throw additional sanity checks up there, using these new tools that are at your disposal, and it makes it harder for you to make mistakes. Therefore, you can make more decisions. I think that bottleneck will not be as painful in the future, right?
I think people will solve. I think if the ROI is there, they'll solve for it, right? But this is the key. I talk about the ROI because that's just how my mind works, right? I mean, like if the ROI becomes clear for big companies, I think they will start to drive hard at it because there'll be like a very clear, earnings drop or earnings pop right from those efforts.
And they're gonna be mistakes, absolutely.
For sure.
To Evan's point, they're gonna be mistakes. If you look back to the housing crisis, right? When the no income, no job applicants, the ninja loans were coming in, everybody kind of just went after that slightly different, and Bear and Lehman went hard, right?
But I will say this: the Klarna seems to do it seems like the right way to do this is to have AI generate like very specific solutions, and I would have to imagine, not being a developer, but I'd have to imagine if you have an AI solution for a very specific use case, that the error rate would have to be lower, right? Because you're training it for a specific use case and it's repetitive work and like the outlier events or kind of like surprise things that could come through, I think would have to be less. So
and that draws back, Aaron, really nicely to what we were talking about with the 60,000 employees at JP Morgan, because the more folks that you have doing the same thing, the more iterative, the more data that goes into the model to say, oh yeah, we're confident.
Self-reinforcing.
That's why some of these bigger players are going to do extremely well with that. So that's why you think even the public companies will do better than the privates.
Yeah, I think what's interesting is as we head into end of year and budget season for big companies, because as Nick said, we all worked for big companies. So like we're coming into like late end of third quarter and fourth quarter, everyone's putting together their budget. So and you'll see, as with all budget seasons, like the top down will probably be like, how are we using AI to grow our business? Like that ask will come out, right? And then from bottom up, there'll be people being like, yeah, look, I don't need 5 more people. I actually need time from the technology team to build AI solutions for me, right? And I think you probably see it both ways. But I mean, man, I've talked with at least 3 friends here in New York, okay, that were talking about building out their teams. One guy he's like, I need to hire like 300 more people. And I was like, dude, like you got to use AI. And he's like, what do you mean? And I sent him the Klarna thing. And he's like, this is nuts. Like, I didn't even realize, and, what's interesting too, Nick, is like, this is the thing that like, a couple conversations I had with people, they're like, oh, but I can't do that. Like, cause I work at X company and we're so big and so conservative that, we couldn't do it. So then I send them articles of JP Morgan doing it, Morgan Stanley doing it. We're going second, like, dude, if those guys are doing it, those are highly regulated financial services companies, right? And if they're finding their way to do this, like 100% you guys can do it. It's just like, you're just not trying hard enough, right? So this budget season, like going into 2025, I think over the next 12 months, we're going to start to see like applications in AI just go through the roof, right?
For projections, revenue forecasts and future costs, do you think we're going to be off significantly more than we used to be, right? Because now we just amped up the power, put turbo blasters on these 2 figures. I think people are going to make some pretty bold assumptions, and we're going to have like either large misses or large
wins,
wins, exceeding those.
Yeah, look, I think I think it's going to be super choppy, right?
Right.
And a lot of people talk about how this like, kind of looks like when the internet happened in like the early like 90s and the early 2000s, like there were huge capital investments to get like cables in the ground and things like that, right? And then, 5 to 10 years later, all the revenue kind of pulled through, right? There's parallels here with chips and cloud infrastructure and other things, right? That will go into this. So, I mean, I do think that that there'll be, Nick, it'd be interesting to see like how quickly some of this stuff happens, but Klarna's figured it out. So, if more and more companies start to look like Klarna, then, you could see, I think the entire AI ecosystem starts to look like the proper unit metrics and things like that. Right. I think it's all about revenue, man. It's just the revenue has to come. The sooner the revenue comes, everything else works itself out, right? So it'd be interesting to see how much pain people are willing to take around the capital expenditure to when the revenue comes on the other side. But I do think the revenue is going to come sooner than people think. Maybe the last thing that we talk about, Evan always talks about the free models versus the paid models, right? So like that could be the one thing that's interesting. The one thing I'm reading about that is that a lot of companies are right sizing the model to the use case. So like like I know Klarna uses OpenAI for everything. Okay, so there's that. But I have heard like a lot of these financial services companies are using multiple different models, and it seems like they'll use less powerful models for specific use cases that don't require a more powerful model, right? So there's this like optimization that happens around cost, which I think also helps with ROI. But I do think that some of these free models might pull through as well, which I think as investors is an interesting is interesting to consider when you think about some of these larger platforms that have kind of these closed systems like an OpenAI, an XAI, an Anthropic, those types of firms. So, but any thoughts on that, right? Like model types and
perfectly sensible. I mean, for the different tasks, you're going to give one to John and one to Mary. Makes perfect sense.
Yeah.
Yeah. I mean, having custom built smaller models, especially on the edge devices, like, the small language models on a mobile device, like makes total sense. I still think Zuckerberg and what they're doing at Meta seems to be the thing that it's hard to track, because if he's going to continue to put billions of dollars into making Llama an amazing model and offering it for free at the cost of everybody else. It's going to require it's going to require everybody to figure out a new business model.
That
will maybe not be the subscription side. And for the revenue to pull forward, you got to figure that one out.
Yeah. Yeah. I mean, this is like, I'm like totally fascinated by this. This is going to be, it's going to define the investment landscape, I think, certainly over the next 5 to 10 years, right? So a lot of big money to be made potentially by somebody, right? So, okay, fellas, let's end it there. Thanks for this. I appreciate you guys.
Thank you.
All right. Thank
All
you.
right, man.
Talk to you next week.
Okay,
Cheers,
cheers.
guys.
Bye.